Good morning, one person. How you doing? Yep, so looking at markets today, obviously, it would appear that NVDA has saved the market, which, no big deal. I mean, pretty cool. Kind of sad that I missed pretty much all of that move. I was at the gym, you know. So, if you want to, there's only one way to get gains, and you have to give up other gains, apparently. I actually could have traded from my phone for some of this, but just wasn't really paying attention, and by the time I looked, it was too late at that point. But anyways, yeah. So pretty much what this means for the market first is the market is now back over the 50 SMA. And actually, I want to share something with you guys real quick. So this is a tactic and a tool that I use to help me kind of at least keep my mindset for the market in the right place. But anyways, really quickly, it's something I call two back-to-back opposing crosses. So you see how the market crossed down here, and then within like a day and a half, it crossed upwards. When we get that, then we know there's a greater chance the market will be into more of a consolidation market for the time being, which means we usually trade in between a high-low range. Till stated otherwise. Until stated otherwise generally means until the market breaks out of this range that was put in from the two back-to-back opposing crosses, then you just continue trading sideways, and you're more likely to see movement like this, back and forth trading. And it can come in whatever fashion it wants to, however ugly, etc., etc., etc. But that's a tool that we do. Maybe a rule would be better to state it that way. But yes, it is in fact a rule that we use to basically just help us not be, thinking that the market's just going to run a bajillion points one way or the other for the moment. So, highly suggest. Good morning, Easy One. Good morning, Pete the Cat. And actually, right there, Easy Win and Pete the Cat are for sure two members of our elites group. And I know that they can back the statement that I just said because I just mentioned it to them in our private stream either a day ago or, well, yeah, maybe probably was yesterday. It had to be yesterday, right? Because yesterday was the day with the second cross, right? I think so. Yeah. Or it would have been either yesterday or the day before. One of the two. But anyways, mention to them as well that when you have two back-to-back opposing crosses in the market in a short period of time like you do, you're more likely to see a back-and-forth market with a high-low trading range that's been put in. So basically that means you should expect, and actually let me put this onto a pre-market, yeah. Let's bring this over to like a 10-minute, 15-minute, right? So basically, that one's a little, whatever, it's fine. Yeah, I was going to say, we're basically at the top of that range right now. So, yeah, I mean, top of the range, kind of irrelevant. I mean, yes, you have to get through for markets to continue, but there's other things I'll be watching. So real quick, let's add where the 50 SMA is at. Let's see, bring this down to here. All right. So it was right here that the market actually entered back into an uptrend, right there. Okay, so right here, uptrend started over that red line. Now, this is something that I always mention time and time again, is that when you follow the market, yeah, 1 second. Yeah, I was going to say, when you follow the market based off of just a trend perspective, as opposed to trying to pick a bottom or pick a top, of course, you're always going to miss a little bit of the move. Or in this case, maybe you're at the gym and you miss all of it. But yeah, whenever you're trying to pick tops or pick bottoms, not that you can't do that or not that isn't effective at times. But when you do it mainly based off of following trend, then yes, you're gonna be late to some moves, or you're not gonna get exact bottoms, right? So, real quick, let's do it like this too. This is where it entered a downtrend. Okay, so this is where the market entered a downtrend the other day too. Now, some people may look at this and go, really? That's a downtrend, that's an uptrend, and it's all perspective, right? So depending on how you analyze the market, you may not see that as a downtrend, or you may not see this as an uptrend. And that's completely fine, but it doesn't mean it's not. So, you know, it may not resonate well with you, but it does me. And the other thing that we like about, for example, this system is that if in the event, you know, and when I say if in the event, it's just, this is how it works, right? If you were to go short here yesterday because you're like, oh, we're below the 50, there's a back test, you go short, you could have held your swing short the entire time and never went red. Because when you follow the 50 SMA as your guideline and sort of your in and out of the market, you see where the 50 SMA was the other day, it was right there. And then you see where the 50 SMA is here, it's right here. So at the same price the market goes into a downtrend the other day and you enter short is the same price as the market changes into an uptrend and you have to take off and then flip long. So in the event you actually follow the system 100% to a T, even if the trade goes against you, your stop loss, or essentially where the trend flips back to positive, is exactly where you enter. So your loss would be 0 or extremely small, right? Or you could have entered short and taken money on any of this drop. You could have taken some money at any point during the drop, right? You could do that too. Anyway, so just wanted to kind of emphasize market was in a downtrend the other day. Now market's in an uptrend. There's a couple things we'll follow for that. But yeah, so pretty crazy. But anyways, this is all having to do with NVDA. At the time, I didn't really realize what was going on after hours when I looked at my phone, but it was NVIDIA. I don't really have a whole lot to say about this. This was never an earnings report that I was trying to predict was going to do one thing or the other. All of that's kind of irrelevant to me. The only thing that mattered was pretty much just see what ends up happening. So what has ended up happening is NVIDIA's blown up. It's caused the market to go up. We're now in a buy signal on the market / consolidation. So, you know, not a whole lot's really changed from the market other than the fact we're just still within the same trading range we've been in since the previous high was put in. NVIDIA just took us back to that high. Not a big deal. Now we're just over the 50 SMA, still in a high-low trading range for the time being. A lot of people try to predict the earnings. Earnings is just one thing that I just never try to predict. I have done it right and I've done it wrong so many times that it's now just something I just don't even care. I just don't think about it. Whatever it does, totally fine. Now, if you're someone that really focuses on individual stocks solely, then that's obviously going to be of more importance. But for me, someone who just pretty much follows the S&P 500 for the day mainly, then yeah, I mean, in an earnings report's kind of whatever. So kudos to those that either bought calls, went long, awesome. If you went short, better luck next time / maybe try not to predict an earnings move, okay? So the other thing too is if you guys spend any time on Twitter, you know, Twitter for me is it's a good social place to gain mass psychology from, which I may have said that wrong, but it's a good place to really just kind of like see mass psychological movements in real time, which one of them was everyone was bearish NVIDIA. So figures it goes up, right? Is that going to be the case every time? No. But one thing's for sure, when I see every single major Twitter account with hundreds of thousands of views on their account saying short Twitter or whatever, short NVIDIA, yeah, I'm not going to short NVIDIA. That's almost a sure tell sign it's not going to go down. So that's another one that you guys can use is you can use massive YouTube accounts with lots of views and, you know, like Twitter accounts with lots of views. And generally speaking, whatever the analysis is, it's not going to work because there's usually too many eyes on it or too many people have seen it at that point for it to become a viable thing, which is very similar to the pullback scenario on Bitcoin to 32,000, 34,000, which I wanted. I started making this analysis, and I'm sure it wasn't the only one, but what I do notice is that if I make an analysis or make a market forecast, and then, you know, give it a couple days, give it a couple weeks, and if I start to see more of that same analysis, then it's probably not going to work. which is another reason why I don't think we felt a 34,000 on this Bitcoin cycle. I think it was just straight up way too obvious of a tell, so it couldn't happen. So keep that in mind. That's a good one. The stream in there, I wouldn't say the stream's broken. If anything, it's probably just, it's probably your mic or something, or your computer, most likely. I don't know. It could be my computer. I don't know. Maybe my $8,000 computer setup can't stream. It's possible. So, yeah, I'm making no big predictions about NVIDIA. The only thing I'm just pretty much here to do is just help you guys and help you guys know that market is on a little bit of an uptrend. Can you go over gap up target? Not really, not yet. I mean, I could, but it's going to be wrong because I can almost assume that the stock market's going to change by the time the market opens. So that gap fib strategy not only works, it's just it can only really give you an accurate pricing at the open of the day, which is another thing that I know makes. So yeah, you have to be you got to wait till the open to do it, right? So in some cases, you could be busy at the open, or the market can just start moving pretty quick at the open. So you can always get like kind of a guesstimate. So like, for example, if the market doesn't move and just stays right here, that means that the gap up swing, or what am I saying? Yeah, the gap up 161 extension will be targeting $507.64. That's what it'd be targeting. Does it have to go there? Absolutely not. Doesn't have to, right? So again, let me rephrase. Gaps work in three ways. There's generally three possibilities for a day with a gap, which is pretty much up, up, and down. Oh, thanks, Connor. So helpful. Yeah, I know. I'm a good guy. I know I'm a great guy. So we don't have to worry about that. I know that. Okay. You have three options: up, down, up. Wait, what? Yeah, pretty much. There's actually more than that, because I guess the market could go up to 161 then fail, but yeah, I mean, there's only, so many scenarios of how something can really play out in the market to a degree. So, pretty much put it this way: gap and go, market takes out previous top range and goes up. You'll see market around $507.64 today. It's pretty much that. It's that easy. Just like yesterday too. So like, here's another one, right? So like yesterday, how at the end of the day that market just ripped up, and like, again, like I really was not even considering that was going to happen. Also, at the same time, I didn't really consider, like I said, I don't really pay too much attention to earnings anymore. Like I do, but I don't. So, yesterday when I'm going to the gym, I'm not really sitting there on my phone going, oh, what's NVIDIA earnings going to do, per se. So like, here's another one too, right? So yesterday, think about everyone that like might have been bearish the market, then got squeezed out, right? But at the same time, like, so this is what I'm getting at is if you look at yesterday's action, right? So yesterday, we, by the end of the day, already hit the 161 downside target. So me, the traders in our group, actually, I don't know, maybe traders in our group were trading more bear. Who knows, right? The reality is. But from what we preach, what we teach, what we show, and what we go over every day is that yesterday, based off our gap down, we have a 161 targetable destination of $494.66 or so, okay? We are not going to actively try and push the market too much further past that point, because this is not something we do. Because we know that a 161 target is far more logical of a destination point for any given day of any given gap, as opposed to a 261 or any further. So the 161 is ideally our expected targetable destination point for the gap on the day, for follow through in the direction of the gap. Anything below or above the 161 on the day is bonus round, which will happen sometimes, and you'll feel like an idiot for selling at 161. But you're not going to feel like an idiot for selling at 161 for days like this, when you know you've reached your target and there's really no point of trying to press it down, and then you avoid some huge NVDA boner candle, right? It's a great time. So as far as yesterday goes, as far as the past 2 days go, so let's go back to the previous day. So, right, let's go back to the sell signal. So from the sell signal, we said, hey guys, we're bearish. And then from there, what do we have? We have a gap down. So on this day, what do? We gap down, we trade to 161. Awesome. It ends up going 261. And then the next day, we're below the 50 SMA. We're still in a sell signal. So what? So we're going to look for a gap to 161. And so we did that. So 2 days in a row, we were in a downtrend. We gapped down and achieved our downside at 161 targets. What more are you asking for? You understand? What more do you want? We're in a downtrend. We gap down 2 days in a row and gap and go to our targets. Does it mean it's easy? No. But as far as the market doing, relatively some things that it's supposed to do, it did it. Markets have been performing pretty rational, pretty good, pretty normal, right? What's not normal is a huge old boner rip 10 points in the afternoon. Okay? But, the market always has to throw a scam eventually. So you get this huge old boner rip through the afternoon. Okay. I could totally pick a different word than that and still be effective in my explanation. So maybe we'll work on that, but it's a good one. So yeah, now, right? So look at, right? So here's a break over the 50 SMA. So literally almost the same exact thing. Ready? So look back here. Remember what happened? We had a gap down and it broke through the 50 SMA, right? Now we go over here. It's literally the same exact thing. You have a 50 SMA and there's a gap up through it. So what are you doing? You're going to be watching a gap fib. And has a 161 target of like 500. It's actually further than that because we closed down here. So our gap target to the upside right now today is like almost $508. It's freaking huge. If it plays out today, it's going to be an absolute banger. You can only pray that gaps this big play out, because if they do, your gap and goes are nasty. So like right now, again, you'd have almost a $4 run today. If the gap and go just straight works, is a $4 upside move today. Now, if it gaps, pulls back, that's all another story. Yeah. I can't give away too much of my secrets and my sauce. That's actually partly why I'm deleting some old streams. And actually, I think I'm going to continue doing it because, yeah, I've given a lot away for free. And not that people shouldn't have it, but I've worked hard to know the things I have and to be censored and, So, but anyway, so I've deleted a lot of old YouTube streams because also some of it, some of the info isn't as good as what it is today. So pretty much I'm going to delete every single live stream I have on YouTube, because it's not like, it's not like they really get viewed anymore anyway. So as far as like generating revenue for myself, it doesn't really do anything. Some of the information on it could be stale and kind of old from older ones. And then also some of the newer ones just have too much goddamn good information that if you want to get it, you have to come sit with me live. You can't go back and watch them over anymore. So, yeah. But anyways, so there's that, guys. If we have a market move up, you got about a $4 move to the upside today. Your golden pocket, it's actually higher than that now. So you see where the candle's at. So like I said, you can kind of get an estimate, but you see where the candle's at now. You see how it's moved up. So you'd actually have to move this like that. There you go. So just like that, your price target's already changed. Now it's $508.08. Oh, wait, candle moved again. Got to move it. Oh, wait. All right, never mind. Target is now $508. So you see, your analysis can change like that. So another reason why markets are not easy is because everything is ever changing and evolving. And even strategies that you have are predominantly based off of the pricing structure of the market. The pricing structure of the market can be consistently changing. So just like this, like I was saying, until the market opens, you don't have the price. So this can all be estimate, and then, 9:30 comes and the candle's up there. It's like, oh shit, okay, now we're up here. It's like, oh damn, target's $510.79 now. So it just depends, right? Just depends. Your anchor view app and fib strategy is so freaking good. Obsessed with your strat card. Thank you so much for your knowledge. No problem, Elijah. I appreciate that, my guy. George, I'm happy you're hearing it. I did move it a little bit closer to me. I moved the mic a tad bit closer. It's probably what it was. Probably wasn't the girl's computer. It's just Connor. Just an absolute buffoon. Stupid guy. Honestly, what are you doing? So Corey, I think the gap fib strategy is great. I don't think like you can't just buy options and YOLO them. Like you can't do that because again, like yesterday's a great example, right? So look at yesterday. Yesterday's a perfect example of how the market can do exactly what you want to do in one of the worst fashions, right? So it's like, hey guys, market's going to go down to like 490, 456, right? Like that was the expectation. And it did that, but look at the first 30-minute candles, no. Second, no, finally. So like after basically being the choppiest, most annoying turd on planet Earth, then it does it, right? So if you buy options, if there's 0 day, you made no money by going there because it just burned your premium the whole time. So you're negative, you're really negative, you're negative, you maybe have made $1, right? So then you have to take options that are further out, right? If you're going to get any sort of, gain on a day where it's just annoying. That's why it's always going to be easier to trade equity or a product in which just the price change interval will dictate profit or loss as opposed to a timing mechanism and or a volatility mechanism such that of options, okay? So the gap fib, in pretty much put it this way, the gap fib, any strategy is better with equity because no time decay. So you're eliminating a huge factor to your profitability. Well, there's time decay and there's all the Greeks matter. So you're taking away all the Greeks, right? Which eliminates 5 different ways you can lose money, essentially, and or make more money. But so yeah, so again, like yesterday, like if you traded options on this, you just got cooked probably. Like most likely, if you were trading short options trying to go 161, you got roasted, just because of how long it took, the choppiness of the market. Now, if you traded equity, I mean, you could have gone short in the morning, been red, and then still won. You can't do that with an option, right? So I don't like the way futures move for some reason. There's just something about them. Now, also, there could be more to that, which we won't get into. But I'm just not a big fan of the way futures. I do trade futures every once in a while. Like a lot of times, if I'm trading futures, it'll be like a pre-market thing. For some reason, I like them pre-market or like after hours a little bit. But I don't know. I mean, something about the way it moves. I'm not a fan of points. I'm a fan of watching decimals move for some reason. So somehow in my brain, for me, it's just easier to trade like 3 times leverage UPRO as opposed to, or like SPY as opposed to futures. But I don't know. I'm not sure why. I think that's also a little easier to manage shares than it is ES. So maybe that's just it. But yeah, I don't know. That's pretty much it. Nothing else. Then again, I know you can make more with futures. Well, you can make more with anything that's leveraged for that matter. So I might give them a go at some point later in the future with this particular strategy, which I was using, but it just didn't. I don't know. I just like equity more. Yeah, so to answer your question, Elijah, there's a lot of ways to look at this. I mean, I use everything at once for trading. Everything. So I look at moving averages, volume weighted average price, Fibonacci, etc., right? And each one of them has a different purpose. The gap fib strategy is not to know how to time a market for me, really. The gap fib strategy is to give me an understanding of value movement. How much may something actually move today? That's what I want to know. So I'm not being a dumbass buying the high of the market. Or if I wanted to buy calls, I'm not buying calls that are $510 when we're only looking to go 508 potentially. That's stupid, right? So it's an outline for directional price movement, how far something may or may not go, kind of thing. Okay. SMA is trend. That's directional, right? So now that I know that we're on the upside of the 50 SMA, I'm not a dumbass over here trying to short everything to the grave. That's dumb, right? So now I've eliminated bias, being on the wrong side of the trend, right? So you have trend, how far something can go now. So gap, fib, how far something can go off gap. Trend, SMA, which direction we're trying to push things up or down, right? Then you have anchor VWAP. Anchor VWAP falls in the category of trend and timing for me. So trend and timing being anchor VWAP is, generally in the direction of the trend, which in this case would be up. And then number 2 being a low risk, valuable point to take entry into the market, into the direction of the trend. And there's a couple other, and then obviously you have momentum, right? So like MACD, you can't just simply trade with the MACD or like an RSI. So again, you have trend, you have gaps or fibs for, potential targets. Then you have SMA for direction, VWAPs for entry. Many times, not that fibs couldn't be used for entry and SMAs couldn't be used for entry. It's not the point, but more so for entry and direction. And then you have things like momentum tools, which would be like a MACD and RSI. Those are things to measure or get metrics in real time to better help tame your emotion as to what's going to happen next. Does this still look good? Okay. So your momentum indicators are really just there as a quick glance tool to go, okay, yeah, things are actually still positive. Like this kind of looks okay. All right. It's not to go, oh, MACD's doing this, then the market has to do this. No. Just because the MACD goes bearish doesn't mean the market's going to fall $3, right? Your MACD does not dictate how far something is going to go. Okay. Your MACD is there to dictate to you in real time, is the transactional environment favoring your direction? Meaning, are we transacting negatively or transacting positively? In which way are you currently pushing or trying to play in the market? So yeah, would you play off the anchor VWAP? So like today, gap fib would be like a target. I'll be watching some gap up anchor VWAPs. Always do that. Yeah. But yeah, James, I don't know. I'm just not a fan of the way futures move. Just watching points, it's just never been. Then again, I just came out of my enemy year, which is when I was doing, most of my futures trading, which probably not the best time for any trading or pretty much anything. But that was it, dude. 2023 sucked in regards to like the market playing nice with me. Like every time I wanted to get a fill, it was like, nah. It's like every time I want to sell something, it's like, nah. It's like, bruh, like, does the system even work anymore? It's like, damn. But like it was just, as far as getting fills, getting things the way I wanted to, is like the market just did not make it easy for me. So whether you can add that to just energy was not in the favor of Connor for, the 2023 year, so be it. A lot of different things that could get at fact, who knows. But anyways, just a bigger fan of the way. Or like what I mean is like I could screw up on an S&P trade, right? Like take a bad trade and like easily be able to manage it like better than like an ES contract. Like for example, the SPY could move 10 cents and it's like I could manage like still pulling off a green from a bad trade that only had 10-cent wiggle, versus if it was an ES contract, it's like there's only a 0.5 dispersion, which means if I want to sell this, then I'm gonna have to sell it on the bid, and then you go, that's a loss. Like, so as far as the incremental change in the chart and how you can manage that, there's a little bit more room in a SPY chart as far as the decimal place movement as it relates to like decimals versus just the points on the futures. There's a little bit more wiggle room in like area for making mistakes, if that makes sense. So it's a little bit easier for me. Now my partner Brandon, who's just a goddamn wizard, that's another story. That kid, I don't even understand sometimes, but yeah. Some mornings the coffee does hit differently, I will say. There's stuff at 8:30. I don't even know what's going on. That's the one thing I actually haven't done today. I really just kind of came on to see if a YouTube stream will work again, which it apparently does. So that's cool. That's good stuff. Where are my glasses? Actually, I'll be right back. I'm gonna go get my glasses. I'll be right back. And coffee. All right, back on here. Yay, markets moved a bit. Does our chat room provide plays? I would say yes and no. Probably not in the way that you would probably hope for, but I mean, I think we do. I think we do pretty well. You know, I mean, if you're looking for someone to basically say, hey, buy this, do that, I mean, not really. We don't make announcements. They're like, hey, guys, buy this. You know, it's not really how we operate. I mean, the other day when we were live in chat, we did say, hey, guys, we're long, buy this, and then run it all the way up to here. You know, or for example, yesterday in chat, it would say, hey, guys, there's a gap down, so you should look to move the market to 494.66. And like that's another thing too. It's like I don't, you know, it's like how much more, you know, there's only, you know, so like that's what it gets hard for me. You know, it's like I could tell you 4 hours in advance, hey guys, look for 494.63. So it's like how much more, like, you know, not really 4 hours in advance because you need the market open, but it's like, you know, at market open, we said, hey, look for 494.63. By the end of the day, you know, that's the target that gets hit. Or even like the previous day, you know, it's like, hey guys, there's a gap down. So, you know, there's a good chance we're going to sell down to 161 target. So, you know, that's a play, right? So, yeah, I mean, I guess we do / don't. I would say our plays and recommendations are really just like an ongoing, never stopping form of education. It's just, hey guys, market's up, market's down, look to here, look to there. So our plays are just basically an ongoing forecast of the uptrend, downtrend of the market per se. It's not like we're sitting back and going, hey guys, wait for this, wait for this. All right, slam a bunch of calls long. It's just, hey guys, market's in a downtrend, look to move the market here. Market's in an uptrend, look to do that. So maybe yeah, maybe no. It's hard to say for sure. I mean, there's plays that we give out, but yeah, I would say we're a little less of like an alert service, even though I could very well be an alert service. Could literally just charge people money, throw them in a Telegram, like, hey guys, 70% of the time this is going to work. Take it long to hear. And, you know, it doesn't mean you'll make money, right? Like, for example, like yesterday, right? Like this gap down 161 target we did. It's like, hey guys, could literally send out an alert. Take the market short here. And then it's like someone buys options, 0 days, they lose, market still goes there, right? Or someone goes short, then gets popped, they take off, lose, then it goes. So it's like even with being an alert service and even having price targets that are very accurate, you can still easily lose money because the market doesn't have to go to where you want it to go in a very fluid or easy fashion that your psychology is able to master, if that makes sense. Hence, part of the reason I like equity sometimes for some things as opposed to a lot of leverage on something, because I could sit through, you know, some of this, or I could see this and, you know, not be freaking out about something. So maybe to answer your question, no. Maybe no is just best. So I would say we do like a mix of both. I really think we do a really good job at educating and providing plays, but I would say it's kind of like a hybrid, a legitimate hybrid, as in you're learning as we go through the market every single day and repeat the same exact processes. So that's another thing. It's not like, you know, it's not like you're jumping in and you're just being fed to the wolves. You know, we sit there every day and we repeat the same exact strategies and the same exact processes every single day, along with providing where we think the markets are going to go, how we're looking to trade them. Sometimes when, hey guys, we're going to watch the markets long, we're going to get long here. For me, you don't hear it quite as often because I like to make sure that we're on like a really good setup. So like, the other day, I mean, because here's the other thing too, is like every day we're looking for a gap and go target. Like that's a no-brainer. But like the other day when we did this dip by long, for sure mention the chat room, hey, watch that one long, because that was a good setup long. So yeah, I mean, I think we do a pretty well job overall. But anyways, enough of that. Oh, actually, I want to bring up... hold on. Not SMCI, OVA. But that's kind of a long spiel. Maybe I shouldn't. Maybe I should. I don't know. Too much in my brain. Nah. Just no. That's maybe another day. All right, so I'm going to get a couple things set up here on my chart. Let me think. I mean, none of this is going to come in. It's actually going to be really awkward now. We might not get any interaction on this for a long time. Ooh, lower band. Or maybe do upper band. Oh, actually, you know what? Give me a second. Hold on, guys. I'm going to talk to my business partner here, and I think I might just do a little bit of an all-day stream. Okay. All right. So yeah, I'm waiting on my business partner, Brandon, here, and I might just hang out with you guys on stream today and just pretty much go through the open. I was actually going to do this the other day, but then my YouTube streams weren't working again. Hell, I haven't had a camera on in a long time. Let's pop that on. Hold on, I might mess something up here, but 1 second. It's possible. I have to try and add my camera to this thing. Yeah. Video capture device. Perfect. Well, that's not going to look good because you got... Well, this is kind of awkward because that's where I stream from. I might have to do some chart configuring here because if I don't, then I'll be looking in a really weird spot and it'll just look weird. I gotta get that TV. I have to get that screen working. I have a 6-monitor setup and I need to order a new HDMI cable that is big enough, but I've been kind of slacking on that. That's fine. That's all dandy. Let's move you over there. Put you on the very bottom. It's good enough, I guess. So, yeah, let me know if the video works okay. It's been a while since I've used this. But should be good, I guess. Man, I'm running a little slow. Okay, but wait, now you're over there. Yeah, or maybe I just make this smaller. Yeah, that's what I'll do. That's a better idea. You do that. Perfect. Good morning, Natural Earth Gems. Ooh, wait. How is that even? I was gonna say that doesn't even make sense. There it goes. It might be on the very bottom of the screen. Okay, sorry about that. Just sending some messages, getting some things going. All right, so let's pop a couple things on the screen. Let's see, this is a 30-minute. Okay, so you got that guy, that's good. And then we have the breakout from here. We'll take that to 1 minute. That's far away. Let's go here. So we did back test that. Rolling up. All right, cool. So yeah, we're oh, yeah, excuse me. Oh, stretching. All right, we should pretty much be set up there. Let's just check this guy real quick. All right. Actually, I think it's kind of interesting. Yeah, again, not a whole lot's really changed since the last time we were talking a bunch. All pretty much the same stuff. Gap fib's pretty much the same. I'll send out, actually, let me see if I can copy and paste this for those of you that maybe like some penny stocks. I'll send you guys a list of some penny stocks that have popped up. You know, these could be arguably late, you know, kind of already. Can you attach files in this? Do they allow you to engage? That's stupid. You should be able to add, you should really be able to add, like, pictures and stuff into these chats. It'd be life-changing. But I will type in a quick little list of penny stocks that have all populated on one of my scans here. So warning AGRX. And you guys can feel free to, you know, watch these if you like. A lot of times there's good moves around these guys. Pretty sure I typed all those right, but Yeah, it looks like AT&T is having some issues this morning. Like AT&T stuff is down this morning. Phones, at least, maybe cell towers. What are we, 854? I mean, yeah, like I said, guys, not a whole lot to discuss. I mean, it's already pretty much done deal for me as far as what I think markets are going to do. Again, potential runs out to 508.67. I mean, there's a bunch of stuff that can happen. I mean, it's impossible for me to cover logically every single strategy and all the edge that we'd be looking to attack from in one day. But for me, everything's pretty much set up, ready to go. Got the targets on the upside. I know valuations, we could pull markets to the downside if need be. Low risk levels in the chart we'd be looking to enter around. All that good stuff. So, yeah. There's really nothing to do on that chart for now. The only thing you can really do is just pop around a bunch of other stocks and just kind of see what's moving, which I usually don't really do these days. East pumped, failed. ERF. NVDA, OCUL. It's kind of interesting. Yeah, the penny stock movement's really in season these days, isn't it? What was that one? Figures. Too funny. Yeah, side note for you guys, if you ever find like easy to borrow stocks on like Thinkorswim and their penny stocks, those are just not ones to short. They're priming you up to just screw you, usually is the case. That's something we were going to kind of touch on a little bit earlier, but yeah. Like I see them right now pushing up IOVA and like EBS, and these are, two pennies to just two lower flow, lower price stocks with easy to borrow shares, which is generally a lot of times when they're easy to borrow, it's to prime up short sellers to short them, then squeeze them out. It's almost, so anyways, if you're looking at stock EBS, you probably aren't, but now if you are, just an FYI. Or IOVA, they got hanging out at +4 deviation, which, it's on the screen here. 1 second. So anyways, you have EBS here, which is coming into the +3, +4 standard error zone. So this is a lot of times big resistance / huge breakout spot. So do be mindful of that if you're watching EBS or if you're looking at it now that I mentioned it. But it's more specifically IOVA. See, IOVA already, so this is what I was talking about. Yeah, 1750. Not too funny. I love it. Yeah. Actually, hopefully, let me find this post on Twitter for you guys, because it would make more sense then. Trying to find it. I know it's in here. All right, so this is what I was getting at. So Dean here. Hey Connor, what's up? IOVA, it's on fire, bro. It's up over 20% today. So this comment comes like a day after I say, hey guys, IOV is trading same price as SMCI, et cetera, et cetera. If you're familiar, you guys know SMCI, had pretty much tanked and had a huge pullback, blah, 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 blah. So the other day I make a post, hey guys, SMCI trading pretty much same as IOVA, you know. Anyways. But there's a difference between SMCI and IOVA, right? So basically what I'm getting at is I'm trying to show the comparison between two stocks doing very similar things but having different characteristics, right? So you're going to see SMCI is probably going to squeeze more. It already hit +4, pulled back 30%, just like SMCI. The big difference here is IOVA is easy to borrow, so the matrix is sucking in dumb short sellers, it looks like. When the stocks are easy to borrow, retail is more likely to short the stock, and then they get squeezed out, right? So what I'm getting at here is what you have is IOVA, right? So IOVA runs up. So let me show you SMCI real quick. So here's SMCI, all right? So where does SMCI kind of fail? So SMCI fails when it gets to pretty much, oh, you can't see it on that view, and I could open up either way, pretty much put it this way. When SMCI gets into the +4 weekly statistic zone, so that's the +4 weekly statistic zone, right? Really, really overbought. Normally our stock gets destroyed. Actually, I mean, yeah, literally, I did not talk about SMCI until it got to about 1,035 and said it has a little more up, but this is where the stock gets destroyed. So pretty much where I'm going to point here, that's when I said the stock is going to get destroyed. Day later, bam. And really, the whole part of the analysis came to the fact that statistically speaking, we're at +4 deviation. Stock normally gets destroyed there. So I literally just looked at the stock, said it's 1,080, it's at +4. It's going to go down. That's literally was my entire analysis. So you'll see that it drops 35% since the high. Okay, pretty much, right? Down to that low, about 35%. Okay, and then here you have IOVA. So back here, right? So IOVA here runs up to +4 deviation. What does it do? It falls down, and that decrease right there is about 30%. So if we look at how much this decreases from here, that's the +4, down to here, they dropped about 30%. So pretty much did its nice rejection off of +4. Now, the only difference is if you kind of pull this up, it says easy to borrow. So this means that the stock is regularly available to short sell on something like Thinkorswim. Now, Thinkorswim is a very popular, well-known mainstream platform and broker. So there's a lot of retail traders that use it. And for most retail traders, they're not able to short penny stocks because they're normally hard to borrow. And if they're hard to borrow, then the investor or the trader, in this case specifically retail newer traders we're focusing on, they normally don't have access to high-speed brokers like Lightspeed or direct access brokers like Lightspeed and, you know, all the other ones out there. Gosh, there's so many, TradeStation and I can't even remember, DOS Trader Pro or whatever. You know, and Cobra. So most of them don't have access to those kind of brokers that allow you to short penny stocks. So what you have is traders who generally can't short penny stocks, can only trade them long. Then you have a scenario where you see a stock like SMCI trade to +4 deviations and then crash really big. Then a couple days around the corner, you have another stock like IOVA run all the way into +4 deviations and crash. The only difference here is IOVA is easy to borrow. So all of the people that were unable to, and I'm not saying SMCI you couldn't short it, but I'm just getting at is that take a bunch of people that trade stocks but are never able to trade short because their broker normally doesn't have shares to short. And then they see all these stocks go up and then crash and go, man, I wish I could short. And then a couple weeks later, they provide them a stock like IOVA that they can short. And then instead of it going up, crashing, coming down, it goes up, crashes, then does what? Goes back up and squeezes them out. Because this is an easy to borrow stock. So it's easy for people to short. Hence, squeeze them out. So it's a reverse psychology trick that I see happen time and time again. There's no perfect rhyme or reason to it, but I've spent enough years looking at chart, 10 years in the industry at this point. It's something I've picked up on and noticed. And the way that I explained it to you is the only way that I can rationalize it for it to make sense to me. The way I see it is, again, you go through the penny stock season. Penny stocks go up big and then they crash big, right? And the players that are unable to participate on the selling side of those penny stocks are generally newer traders because they don't have access to the more sophisticated, more expensive brokers that allow you to facilitate shorting on those stocks. And then comes a day when they're provided an opportunity to short something like IOVA, which then you see it doesn't work for them, right? So it's something that I notice quite often. So that's why I was able to say, hey guys, it's trading like SMCI, and then after it drops 30%, it's also easy to borrow. It's probably going to go up and squeeze shorts, right? Because that's just, it's a pattern, right? It's kind of a commonality thing that I've seen one too many times. So that's another little tidbit for you guys you can take away for the day. So again, I'm not really looking for the the retracement. Oh wait, let me go back to SPY. Wrong chart. This guy. Easy win. You said what's the retracement? The hearts in the way and target based on fib SPY. So again, the gap up or gap and go, gap pullback and go. Target would be $508.67 as it relates to 161 extensions. It's actually a little different now, but it'll change a little bit, but pretty close there. So about 508. Right now the pullback destinations are going to be, without looking at any other anchored VWAP in play, your pullback destinations are all the way down to 599.87. So you can actually see how the market perfectly sets it up for a 1-to-1 risk reward usually to start the day. So like if we were to go, hey guys, the market's either going to go up to here or it's going to go down to the golden pocket. You can see it's a 1-to-1 pretty much, right? So the market perfectly sets you up for a scenario where you can't just be like, oh, market's going to go there, I buy. But the market always pretty much sets you up at a perfectly fucked risk to reward scenario. From there, you have to find a good risk to reward. So it's like, even though 70% of the time we know the market's going to go up to this level, generally at open, it's perfectly positioned for a fucked risk to reward. Because that's what the market does. They make shit not easy. Or the fact that the information is so regularly available that it's hard to gain that extra edge kind of thing. You could also argue it's that, right? There's so much information that's regularly available that the market finds like equilibrium or like fair market value, or that every single price that you see on the market is fair because it's just the market, right? So anyways, yeah, so now it's either, again, pull back to golden pocket, then go, pull back to golden pocket, fail gap, which I don't really see happening, but you never know. Or we're just going to gap and go up to, 508.24. So basically what I'm going to be doing is I'm going to be watching the long bias to start, and then also looking for longs into our 15 and 30 minute volume weighted average price of the gap today. So again, whatever form it wants to come in, if we want to gap and just run straight up, I'll take on some long. That if fails, it's not going to kill me. And then if we don't just gap and start going right away, then I will look for pullbacks, either down into the golden pocket of today's gap and or into the 15 and the 30 minute volume weighted average price of the overnight gap. Once we get there, I will look to reverse the market's long. And if successful, then we'll reverse the market's long. If we fail to hold the volume weighted average price on the 15 or the 30 minute of today's gap, then that would tell me there might be some uncertainty of today's gap. And instead of it performing positively, we might actually shift it negatively. That could come after 4 or 5 hours of market trading. So that may or may not be something. When I say the shift, again, any of these things could take hours to play out, 10 minutes to play out. But yeah, so I know it's a lot to take in, and there's no way that I can even show it to you right now because the market's not even open. So these are all the strategies that I can already see how I'm going to use and deploy. But again, the market's not open, so you can only see like so you can't do the fib or you can't do the volume weighted average prices on the gap yet. So I would show you if I could show you, but I can't because again, market's not open. You can kind of see right here, this red guy here. That's one we're watching. That's the, this is the 5 minute, but either way, 1 minute, 5 minute, 50 SMA trend, that's another one, which we usually use for an immediate trade. So like here's one, like it would be a dip in the 1 minute, but that was after hours, so you can't really. So like here's a trade that I 100% do is when we get a, so this is pretty much like a guaranteed intraday scalp long trade that can develop into a big long trade. So you guys should pretty much already pay me $6,000 for what I'm about to show you. This is after hours, so not the best because of liquidity, but you know, when you come into what the heck? When you come into when you have it happen during like regular trading hours, it's a little bit better. Damn it. Dummy. Come on, dude. Get it together. There we go. Good enough. So you can actually see here, like this dip misses this VWAP and this miss. They all pretty much miss here. So like after hours, you actually really didn't get interaction on this VWAP here, which again, no big deal. But usually in like real market hours, you do. So anyways, it's not even that, it's arguably this break point, but I'm getting too much into the weeds of it. So to put it simply, again, this red line here is where we started an uptrend, right? That's the 50 SMA. So if you look to the left real quick, right here, I'll put a smiley face. Where's this guy? You see right there. All right, that is the 50 SMA. Once you get over that, you're in an uptrend, right? So right here, breaking over the 50 SMA, that's where an uptrend starts. So then when I anchor a volume weighted, so then look at, so that's a breakout, and this pullback here, that's the back test of the 50 SMA right there. So that red line, again, remember, right there, the red line we break over. So that's a breakout, and that's a back test of the 50 SMA that just broke out, trying to keep the uptrend intact. So once we break out and back test the 50 SMA, I then a lot of times, this is part of a strategy, this is one edge to strategy. We'll anchor on a 1 minute and a 5 minute, either the breakout or the back test of the breakout of the 50 SMA, and then track that on a 1 and a 5 minute scale, and then add long the dips into that volume weighted average price. Because that volume weighted average price would be the volume weighted average price of the market participating in a way that's trying to start a new uptrend. So whatever volume has created the breakout that I know is trying to start a new uptrend, then I want to track that volume that's actively moving the market in a way that's now creating a new uptrend. So whoever broke out the market into an uptrend, if they're going to be strong and they're going to be successful in moving us into an uptrend, one of the things that they don't want to do is go negative on their position, which means they would like to hold their volume weighted average price of the breakout, hence using the 1 and the 5 minute volume weighted average price in relationship to uptrend, downtrend breakouts above and below the 50 SMA. You should pay me $6,000 now. Not kidding, but you know. So, for example, everybody who got long the uptrend yesterday has won big, and the key volume weighted average price on the 1 minute chart is right there, 501.78, right? So you got to think, right? So from the breakout and this dip and this dip and this dip and all of that, the key volume trend is right there. Does that mean we're going to sell down to there? Not necessarily, but you know, it's a key level, and you know. So anyways, that's a tactic that I use. Oh yeah, side note too, guys, I'm indifferent about the gap too. You know, if the market wants to run all the way 508, so be it. You know, sometimes when gaps get a little too big, then it becomes a little outrageous and they don't like to perform. So we'll see, but again, I'm indifferent of the gap going, gap pulling back, gap failing, etc., etc., etc. You know, just know that I'm always kind of indifferent of what the market happens. Is that an algo wick? It's gotta be. Oh, man. Oh, wait. I'm looking over there, but I should be looking, because that's the chat, and then my camera's over here. So really, I should have been having my screen this way. Sorry, I'm probably looking really goofy there for a hot minute, just looking sideways. Man, this is so weird streaming. My charts are like, everything is completely backwards this morning now. I don't even know what I'm doing. Yeah, side note, I'll be right back. I'm gonna go get a slight refill on the cough, and then we'll be good to go for market open. Again, guys, another thing to be mindful of is that again, today would be, let's see, today is just an absolutely ridiculous gap. So, the gap and go failing, I'm totally kind of in line with it not working right away. Hell, maybe it works in like a day or two, but again, with such a big gap, you got to wonder if probably going to see some profit taking. Like, and again, we've been in a back-to-back crossing market. Another thing that we pay attention to is the 50 SMA, 498.31, not even sloping to the upside. How is... Yeah, I don't believe that. Yeah, it always says my audio bit rate is 0, which is basically impossible. I don't believe that. Oh, I see. I was looking. Oh, it makes more sense. I was looking at I had the wrong screen up. Durr. So I've been sharing on this screen, sharing you guys the other thing. That's just dumb. Someone should have said something in chat. Drummers Anonymous. What are we looking at? Pretty much just one thing and one thing only. SPY. Actually, I should look at the VIX this morning too. Well, I mean, I know the VIX entered a downtrend. That's obvious. 5 day. It's gotta be, right? Yeah. Easy. So what time is it? 9:20. Still have 20 minutes or so. I mean, yeah, I'm going to show you the VIX real quick, but it doesn't really matter all that much because, again, it really doesn't matter. So we'll go to the 30-minute. So if you look at the 30-minute chart, okay, this right here is where the market is uptrending on volatility. So past couple days, market's uptrending volatility. The 50 SMA on the VIX is about basically $15 or so. Once below that, you would assume that the market is basically back into a downtrend on volatility. So you can see here 15 with the overnight gap up, SPY, NVDA, VIX goes down, etc. So now you have the volume, or the volatility index is now below 15. Okay. Basically, that just means volatility entered a downtrend, right? Which obviously, if you look at the market's going up, volatility is going to go down. So again, we pay attention to both the VIX and the SPY because one many times can be a precursor to the other, etc., etc. So for example, like right here, right, you can see on this day, the volatility index gapped up and actually traded over the 50 SMA and pretty much traded sideways. So like on this day, what you're getting is you're getting the volatility entering an uptrend when the SPY had not yet entered a downtrend. So the VIX was a precursor to telling you that the volatility is suggesting that there may be some trouble, right? And so the volatility goes into an uptrend here. The VIX or the SPY did not. And then the following day, the market drops, VIX is up, right, et cetera, et cetera. And that's what kind of led to that past like 2-day down drag on the market. So a lot of times volatility can be a precursor to what happens on the market. And then other times the market could be a precursor to volatility. But I feel like I see volatility react faster than the market. I got to pay more attention to that before I say that. But yeah. Actually, kind of would be fun to look at NVIDIA, I guess. Because I know everyone and their mom is looking at it today. Oh, snap. Maybe I should have looked at NVIDIA earlier. What do we got? We got NVIDIA is almost at plus. Ah, well, that's standard error, so it's, yeah, let's see. I mean, shit. That's definitely resistance. Yeah, you can't catch me. I mean, I don't want to be the one that gets called an idiot, but yeah, I couldn't buy NVIDIA there. I don't know. Absolutely not. I mean, yeah. I mean, it definitely pumped on earnings, but you just pumped right back into resistance, really. You basically would have to, you need NVIDIA to start doing, like, I mean, it's what, so that's +1 deviation. I mean, you're trading +3, +4 standard error. So not as strong as standard deviation, but very, very strong areas of resistance. Hence why you can see every time NVIDIA came up into that blue as well, knocked out, blue, knocked out, blue, knocked out, blue, knocked again. So I don't know. I feel like, I mean, again, I'm not up to speed on NVIDIA as most as some others, sure, but I mean, NVIDIA is definitely pressing just basically back into resistance right now. So, if this thing shits the bed there, I really wouldn't be surprised. So we'll see. It'll be fun. But yeah, I mean, you're trading one standard deviation away from the mean. So you're over fair value by one standard deviation. You're over fair value by 3 or 4 on standard error. Doesn't mean it couldn't go higher. It's not what I'm getting at, but it's just a probability zone where a lot of times you can see that resistance. So interesting. Maybe pay closer attention to that. Should honestly be playing like a Gario right now. Oh man, chilly. I'm tired. All right, we got 3 minutes till the open. Man, tired. Just yawning all of a sudden. Why is the market so extreme? I'm not sure if you just mean in general or if like you mean today personally or like just a move we've seen, but yeah. I mean, if you're, referring to today, I mean, it's kind of NVIDIA, a lot of hype around there. Well, that's part of the problem or part of the reason. The other part is that we just came from a sell signal, so we've had, volume on the market shifted bearish, so bearish leading into NVIDIA earnings. NVIDIA earnings being good. So you saw the market go from a negative sell signal, flip positive into a buy signal. So you kind of had an environment where a lot of market volume was short, leading into a big earnings announcement being good, market flipped the other way. So you might have also had, I would say just some more selling volume, into the market, which could have added some fuel to the fire to the upside, obviously. No, we use standard deviation still. Yeah, we've gone over a couple standard deviation things today. Oh boy. Yeah. It's out of nowhere. I wasn't yawning before. All right. Little pullback start today. I mean, obviously, market's going down, dude. Like we said, we have gap up targets to where they're at. Gaps are really big. A lot of times when they're like this, you get a little bit of a relax. Nothing to be... Nope. No need to panic, folks. No need to panic. Again, we still have room for the 5-minute 50 SMA trend to catch up. 1-minute 50 SMA trend to catch up. We have a lot of time for our 15-minute and hold on one second. A lot of time for our 15-minute and 30-minute to catch up. So I'm basically going to be neutral to bearish for the time being until we get catch-ups on some of our more low-risk volume-weighted average prices of the gap for right now. So yeah, that's pretty much it. Just chilling, kind of neutral, slight bearish until we get some trend catch-up. Which, when that happens, I'll let you know. And that does not mean that you just start shorting everything because someone on the internet said so. Which, did I even say that? I said neutral to bearish. Okay. Excuse me. Yeah, Miguel, we went over a couple standard deviation things today. Like I said, I'm just kind of rolling a little neutral bearish right now. Neutral bearish meaning not excessively bearish, just expecting decrease a little bit here or there. But yeah, yep, that's pretty much it. And then again, you know, part of that thesis comes into play because again, we've had a false cross here, and I don't call it false cross, but negative cross here, positive cross here, negative cross here, and a flat 50 SMA. So not even the 50 SMAs pointed up. We've been in a back-to-back crossing system. When that's the case, my rules say it's a consolidation market. So, you know, though I would love to see a gap and go all the way to $508, there's still other rules at play here that we have to watch. Now, it doesn't mean that 508 doesn't happen. But yeah, remember, gap's working three ways. You're either going to gap target, you're going to pull back, then go to target, or it's just going to fail altogether in some fashion or another. So if you've been bearish today so far, you should be taking a little bit of money along the way on your trades, obviously. We still have not reached our 1 minute volume weighted average price support. We still have room down to that. That's at $502.51. That's kind of a common VWAP I would like to see interaction on a day like today. Again, doesn't have to happen, but it's something that I look for and it's common, and we'll look for it right now because why not? That's what's up. How's NVDA doing? That's probably a big proponent to today's action. I'm not currently looking at it. It's not really, I mean, nothing to really, I mean, I don't really, whatever. It's just opened up and pushed up 20 bucks into some resistance, is about it. Chilly, 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 boy. It's always chilly in my house over here. I live like kind of off a lake, and we get this just really cold draft off the lake, and it just, no matter what you do, it seems to creep into the house one way or the other. NVIDIA kind of, I don't really care. I'm not gonna sit here because I feel like if I say one thing, you guys are gonna just like think it means one thing, but it's just, yeah, I mean, NVIDIA is just chilling, doing its thing. So far, kind of hanging out to the upside. Whatever. Let's go pick the VIX. VIX filled, so VIX had a gap to fill on the downside, went down. Market didn't really go down, but huge gap. Not necessarily one-to-one. Oh, man. Chilly, dude. Freaking chilly. That's why I'm wearing a sweatshirt. It's cold. And still have time for 15-minute, 30-minute volume weighted average price catch-ups, 1-minute price catch-ups, 30-minute price catch-ups, etc. So can't really be too long biased. Still just kind of hang bearish to neutral for me. That's the 5-minute, 5 minutes down. Say 1 minute chart, SPY pre-market under 50 SMA. So 1 minute's bearish, 5 minutes bearish. 10 minute is attempting support right now. So 10 minute just hit support on SPY pre-market chart. Not that I follow that as much, but just an FYI, SPY pre-market 10 minute chart is hitting support currently. The 1 minute SPY chart has not even reached its 10 SMA for support, so a lot of times you need that to catch up first too. I'll show you what that looks like. So you kind of see here, right? See how the 1 minute SPY 10 SMA still hasn't even hit price action. So, you know, again, nothing's like a perfect world, but again, a lot of times that's something else you see on big gap ups as the market kind of chills out minimum till like you see this 10 SMA catch up. That's a lot of times something you're going to see. Not that I follow it as a be-all, end-all, but those are just a couple random things. Again, like I was saying here, if you look at the SPY 10-minute chart, right, you can see this is a 10-minute pre-market chart, 10 minutes coming into 50 SMA. Not that that's a be-all, end-all, but, you know, just, again, that's arguably part of your little bit of a bounce right now. Again, I would still be waiting on 1 minute slash VWAP catch-ups. You know the jam. Speaking of two, should probably add this here. So that would just be the high of that current candle, and that is the open. Okay. Whoa, what did I just do? I'll Control Z that. So it's actually probably like a good, so watch this, ready? So remember like a second ago where I'm like the 1 minute's in a downtrend. So you see how the 1 minute's below the 50. So 1 minute SPY hasn't crossed back over 50. That's been in a downtrend, okay? Remember how I said the 5 minute went into a downtrend? So the 5 minute went into a downtrend but hadn't yet back tested the 50. See how we're riding the 50, then we break it down. So the 5 minute enters a downtrend. This is a bounce back on a 5 minute pre-market chart, basically testing that breakdown. So this is the 5 minute SPY chart, essentially back testing its breakdown and attempting to stay into a breakdown. So you're kind of getting a little bit of a battle here between maybe new 5 minute sellers, etc. Not that that means a whole lot, but it's just to help you kind of see the motion in a chart, things that you pay attention to. You know, not that you have to pay attention to that exactly, but you can see, kind of give you reasoning behind, okay, we're riding trend up, snap down, back test 50 there. Okay. Again, still have not had any VWAPs that I'm concerned about catch up to price action yet. Yeah. So that basically means I'm still neutral to bearish. That does not mean that markets can't move up, down, or do anything that looks good in the time being. See, like right now, it could very well be like, let's see, could be doing a 1 minute top test, but probably not. You're probably through that, right? Settings, yeah, I mean, you're pretty much through that. Maybe it's a 5 minute, but meh. That would still be the same price point. Yeah. Yeah, so again, you know, I'll watch 1 minute and 5 minute trends from 50 SMAs. Again, you have to, I mean, yeah, the market progresses through time frames. Yeah, pretty much. But yep, I do that as well. As you can see, I'm running a no pre-market chart. So use no pre-markets, use pre-markets. Generally speaking, it's pretty much the pre-market creates, what does it say? Pre-market creates kind of its own market. Yeah, the pre-market creates its own market, and we use those volume levels into the live trading hours. Yeah, pretty much. UPRO. Bye. Let's see. Yeah, I mean, it was a good little pop candle there. Again, that's pretty cool. You know, still haven't gotten our catch-ups that I'd like to see. Again, if the market gaps and goes, obviously levels won't catch up. If it gaps, kind of chills and pulls back, then they do. But still, you know, let's just re-emphasize everything. We have gap and go potential targets all the way to 508.25. Generally means as long as the gap works, holds, market trends higher successfully, you're going to see $508 or so today. And the problem here is we kind of have, the only real issue with the way the market's currently set up is you have long targets to $508. That's like $4.15 up. And you also still have pullbacks down to potential pullbacks to VWAP, which may not really come, right? Or it could come in the fashion of just hanging out. So it's like the trade is really about a 1 to 1.28 right now. Unless you know, move your stop up, you know, you could do that as well, but then that would be following, for me, some sort of discretionary rules as opposed to my system. So, you know, I can't do that. Now, it's not that you can't take any of this long, you can't trade any of this, and it's not that I'm not saying that. I'm just getting at, as far as like all the things I know, yeah, 508, great target. We still have golden pockets that haven't been tested. Not that they will get tested. But I like to see my volume weighted average prices catch up, generally speaking. But still, nonetheless, the long targets for today and even arguably into tomorrow, as long as the gap is successful, it's still 508.25. That doesn't change, okay? So another thing too, I'm not sure if you guys are familiar with Fibonacci, but when you're over the 100 fib, which it's kind of like goofy because when you run a gap fib system, the 100 fib is the open price, right? So it's like the general consensus is if you're over the 100 fib, then you can go to the 161, which is true. But it's just kind of weird because the 100 fib is the open price. But yeah, since we're over the open price, which is the 100 fib, that's when it becomes more likely that you're going to try to tack down 161. So again, still 161, 500, 825. That's our maximum long that we'll go for today, which would be absolutely insane because of how big the gap up already is. And then to run there, it's pretty wild, but I've seen crazier things maybe. But yeah, I mean, that's pretty much it. Yeah. So basically all your job is to, as we move to 500 and 825, make some money whatever way you can. That's it. I mean, I wish I could tell you everything and be perfect all the way around, but it's nearly impossible to do that. So, which means I've seen markets try to go for 161s and still fail and blah blah blah. But hell, we could go to 161 by the end of the day, right? I mean, the market can do whatever it wants. I'm not saying it's going to be easy, but you could pop here and you could fall all the way down here, and then you could come back up, and then you could go there, right? I mean, the market will do it in whatever way it wants. That's why the objective is always just have your targets and take some money along the way. But it helps knowing targets and things like that, because then you're not kind of oblivious as to what the markets are trying to do. If you had no idea the market could go to 508.25 today, you might just scalp along and then never try to buy long again because you think the markets went too high. But in reality, they still have another $3 they can go up, Which, by the way, yes, I did take on a little long over the 100 fib, sold some, riding some. Anyways, I gotta go to the bathroom. I'll be back. Also, by the way, because I know, just in case, as far as gap systems and what we look for, that looks terrible. See, TradingView sometimes is just not. Maybe I'll just put it right here. So, as far as the system goes, I would say it's got anywhere from I would say about a 70% rate as far as it working on a day-to-day basis. I'd say it's probably about that. And I came up with that number by going back over, I don't know, I've gone through 2008s, 2009s, 10, 11, 12, 13, 14, 15, 16, 17, 18, gapped them all, tested the strategies on 10 plus years and counted, tally marked, and so I would say it works about 70% of the time as far as the market's trading to 161 destination points on the day. I would say times at which maybe it's a little more I would say times at which maybe it fails would be obviously if you're in consolidation markets, which arguably the market kind of is. But yeah, still nonetheless, if we really take out this high and run out, it's 508 or so, some pennies. And yeah, that's about it. Side note too, we still don't have a wait, let me double check. Yeah, no catch up there. All good. Yeah, still don't have catch ups on VWAPs that we watch for. So again, that just basically means either market's gapping and going, Market's going to fail a breakout, then reset back to support. Either one. All good either way. No, Corey, I don't use 1 minute 10 SMA crosses or 5 minute. I mean, there's a bunch of stuff I look at, but that's not the main purpose of what I look at. Those are just kind of random things that I notice in real time. Just be like, oh yeah, kind of makes sense. Like, yeah, but not the main stuff that I watch. No. I read that question wrong earlier. Thought you were talking about something else. Again, we did mention as well. Where is my chart? Where is NVDA? Do I need to bring this up on? Let's see. Oh, wrong chart. Is it this one? Remember we did talk about NVIDIA being into a pretty overbought spot. A lot of people could be looking at the earnings move here on NVIDIA and be like, oh, this is amazing and it's great. And it's like, yeah, I mean, it is good. I mean, obviously it's going up, but it's just gone up basically back into standard error selling points. So the standard error market is, would be fond of having some sells here. So again, I don't think necessarily that NVIDIA is really in a great spot to maybe progress the market higher. It's possible. It needs to basically break out. I mean, obviously it has to break out the standard error zone, which is not as likely for big tech stock or big cap stocks to do. We'll see. I've been wrong before. But yeah, I mean, NVIDIA is not really in a price value spot on a chart where I think, most people are going, yes, this is a fantastic deal. Doesn't mean markets can't be irrational, but as far as saying, it's a great deal, it's definitely not. Real quick, is the volume coming through? Okay, my mic was kind of moved away there for a second, but yeah, everything. Oh, I could probably move that like a little bit. I mean, whatever, it's fine. It's fine, it's fine, it's fine. I mean, the coolest thing would be for the market to go to $508.25. I think I'm going to alert Twitter just in case. Sometimes that helps. Sometimes the market makers are out there watching the post. So we'll see. Let's say, hey, market makers, today's gap target is 508.25. Make it happen, Captain. We'll see if that helps things. Yeah. But again, like literally there's nothing to do now. Like, I know it sounds crazy. I mean, there's always something you can be doing, but that's it. I mean, if you took some long over the 100 fib, you've made some money. Now you can sit back, let it roll up to $508.25. If it comes down and fails and you're stopped out, okay, whatever. No big deal. Then what? Oh, well, then we still have the opportunity at the 15-minute, 30-minute volume-weighted average price of the gap to bounce the market again. Also, if the market starts to look super, super, super weak, and we think it's going to go to the gap volume-weighted average prices, then you have an intraday short there, and then you have a bounce trade there, right? So there's numerous ways to attack the market, even if we don't go to 508.25 here right now, or just in general, on an easy path, all right? Again, like I said, I'm really always indifferent of what happens. So I get, yeah, that's about it. And there's, we develop a lot of rules for ourselves and things we try to follow. And, like today the gap is so big and we kind of been doing this back and forth crossing. So it's like, days like that, it's like, yeah, maybe the gap target's a little less achievable, but hey, you just got to follow the rules as best you can, which is until we're proven it's not going there, it's going there. Also, I've noticed too, sometimes when gaps, no, just sometimes in general, if we don't get a target today, like for example, if the market gaps up, doesn't go to 508 today, because again, the overnight gap was so big and whatever, right? A lot of times it could be hit tomorrow. So like if we don't, like if market doesn't somehow just randomly sell off, gap holds until tomorrow, but we don't hit 508, then a lot of times like tomorrow the market would gap up into 508, right? So then you'd have a gap up that hits today's target, but then a new gap to trade to tomorrow. Again, the market's the market, does whatever it wants to do. You know. So I guess I'll stop saying that you know, because I guess you know. Otto Berry. Thanks, my G. Thanks, my guy. Appreciate you, fam. Yeah, Corey. So like right there, like, and you could even do it so that you make some money, right? Like, I would set it so that you even make a little bit. Like if you lose the rest or whatever, at least you make a little bit. That's how you know, like that's a good. I mean, that's how I always feel, you know, because like, you know, for example, even $100 a day, it's 25 G's a year. So sometimes you can kind of look at your P&L at times and just like there'll be a day where it's like you still have some money and you know, and it's like you might do a trade that ends up kind of eliminating some of the P&L. It's like, well, that's kind of dumb because like even that was still 50 G's, like, you know, or whatever it might be. It's like that's, you know, so again, when it's just money moving on a screen, sometimes you don't have the reality feel to it. But anyways, nonetheless. I really should bring my Xbox up here so I could just be gaming while this is all taking place. I could play Agario. Anyway, so yeah, just chilling. Got some longs in. I mean, again, if the market comes down, takes those out, don't really mind. I'll be looking for some new dip ads at volume weighted average price levels. I mean, we still have the new buy signal trend. We have the 50 SMA trend. So it's like, it doesn't even matter. It really doesn't. To me, it does not matter what happens from here. Go to 508, don't go to 508. Come down for a dip buy, don't come down for a dip buy. Completely irrelevant. Just make sure you don't have so much money on a play that you have to worry about what actually happens, right? Because that's it. It's like if you use all your capital on a trade or you put so much in a trade, then yeah, it's like it does actually matter what happens, right? But so that's kind of part of it too, is like just make sure you're not out here trying to make $1 trillion on an account that shouldn't be making $1 trillion, and you'll be fine. Like you'll be fine, because then you'll be able to sit, you'll be able to watch the market, which you'll be able to go to 508 or don't go. Doesn't matter, right? You're protected. There's like some other tactics I could show you guys, which sometimes are fun to do, but I was about to, but then I'm like, I could lead you guys into a wrong path of like maybe doing too much that could end up hurting you. So I think I'm just gonna avoid doing that. But so yeah, just keep things somewhat relatively simple. Come on, market, go to $508 a day. Do something outrageously sick. Okay, don't do a dumb gap fail. No, show everyone the power of irrational markets, somewhat rationally irrational markets. That would be sick. Today would be the day to do it. But again, like I said, you know, you still have NVIDIA, which is supposed to be the golden pony of the market that's helping the market today. But you also have NVIDIA just rolling right into standard error resistance. So it's like, if this is supposed to be the candidate to help drive the market today, and it's the only one, and it's not performing, yeah, I mean, the SPY might really struggle to go all the way to 508. And then again, you have it right into standard area resistance. So, you know, it would be nice to see this guy pick up. That would help the market, but you might be asking for a lot because, again, the golden child of today's market is basically right in resistance. So I wouldn't be someone looking at NVIDIA banking that this thing is just going to run lights out after that earnings, regardless of what the earnings are, because again, it's right into statistical selling locations. Come on, SPY, don't be lame. Then again, it's like I've seen in the past too. I've done some research and I've seen some crazy, like this was back though. I mean, the gaps wouldn't be maybe as big, but you know, this is maybe back in like 2017s or 15s, maybe it was 14. I don't know, but it was some time back then. I'd seen the market do gap ups like this like 3 days in a row and work, and it was like, damn, like crazy, you know. But I'm sure there was, I don't know, something crazy going on back then at that time. Live stream, 30 people. I mean, I could have swore YouTube would have put our stream front page and center. I mean, that's what I would. Yeah, I don't know. Maybe if it goes to $508, then they'll put the stream front page and center, because, you know, then maybe. Well, I don't know. Maybe. We'll see. I don't know. We don't really know. But I would imagine that if the gentleman on, there's still got a lot to play out. I'm just saying, if the market goes to 508.25 today, and the kid in sweatpants has been telling you this since early pre-market, I would think we'd want to put his stream front page so that way we could help other individuals on the planet in the same way. But maybe we got to go to 508 first, so I don't want to speak too soon. But again, to me, it's irrelevant. Actually, it doesn't even matter. I mean, 508 or not, doesn't matter. Look at, ready? Like, let me just, again, watch. Today's probably going to be the day this shit don't work, but, like, look at this. Again, like, ready? I mean, wherever you want. I'll take you however far back you want. We'll just keep going. Okay? So, again, we'll just, I don't even know where we're at in this chart. All right, we'll start here. Okay, there we go. Yeah, sure, whatever. Here, there. Okay, so here's a gap down. Okay, ready? Here's a gap down. But watch today be the day this shit don't work. But, I mean, I wouldn't really be surprised if it doesn't. It doesn't really matter. So, wait. So, this is open to close. So, that's about it, right? So, like, on this day, right, here's a gap down. Market open. Golden pocket area. And we shied 161 by, like, 10, 20 cents, whatever. Okay. So, I have no idea what day that was. So, let's continue over. Or not, because it's on that. Okay. Here's a day. Now this is a day where it fails. I can already see it's because this would be the open and that would be the close. So you can see on this day, fail. All right. I mean, this day obviously works. This was a small gap up. So you can see here, small gap up, and then, you know, small gap up work. You know, here's another one. Here's a gap up. So you have your gap up. And you go from open to close. You can see 161. Again, here's another gap up. So you have gap up. Ready? There's gap up. And there is, damn, 161. Here's a gap up. So this is a bigger gap. gap into the start of a buy signal, gap up 161. I mean, dude, I could go for days. Now again, like here's another one that fails. So you have gap down. So it would be open, previous day close, right? So there's a fail, right? So you can see we fail. Okay, sure. Here's another gap down. I mean, dude, it's all day. All days, every day. That's why I can sit on a stream and just basically tell you this and not even really worry about it, because okay, so if it doesn't happen today, what does that mean? Like 3 days from now when we get a gap down, it's gonna work. Okay, cool. There's a gap down, there's 161. I mean, dude, where are we at? So, oh, here, look at this gap down. There's a nice gap down. Open, previous day close, 161. Oh, here's a gap up. So there's your open, previous day close, 161. Okay, sure. Here's a gap down. Oh, what do you know? Gap down, previous day close. There's 161, 261. Oh my gosh, so odd. Oh, here's a gap up. Here, see gap up. Okay, yeah. Oh, there's 161. Shit, that's weird. Odd. Weird. Here's a gap up. There you go. There's your gap from open, previous day close. There's 161. That's just fucking what the shit? No way. Here's another gap up. Oh, that's a pretty big gap. Here's another gap. But then again, today's gap's pretty crazy. There's 161. I mean, here's another gap. This one's kind of funky. It does it, but it does it after resetting. So there's the open, previous day close goes 38.2, then 161, but that's just weird. There's a gap down. So here's your gap down. Gap down, and then there's your 161. Okay. Oh, look at this huge gap up here. Huge banger gap up, back, gap up. There you go, 161. So again, it's a simple, repeatable process. It's just basically measuring the impulsive move overnight to get an extension target as far as the impulsive move working, right? So the fact that I just pretty much mentioned it so much, watch it not work today. But again, you know, let's look at our gap here today. So we go to our gap today. Where are we at? I know we're so far back in this chart. There we go. Like today's gap. I mean, like here's the one thing I don't really like about today's gap, right? Like, whether you want to call it gapping into all-time highs, and then, you know, again, right here, look at, you have, I'm on a 30 minute. There we go. So the only problem is you have a, not that it won't work. I'm just saying, like, there's things I don't necessarily like. There's bias, right? You can build a bias because of what things look like, right? You know, so that's another thing we do as investors and traders. We look at a chart and go, oh, well, things look, right? Well, look is one thing, but reality and it happening is another thing. But yeah, if I had to create, you know, it would be, I don't like the fact we had a sell signal here, then a buy signal here, then a sell signal here. Those, for me, are rules of consolidation market, which we kind of did. We went back and forth for a little bit. So we have a huge gap up. The 50 SMA is still sideways. So basically this market needs to launch itself to 508.25, and then that will create an upsloping 50 SMA. But right now it's sideways. So there's some things that are opposing the move to 508.25. Sure, right? Totally true. Like I said, it's a strategy that probably works about 70% of the time. No, Sam, the market opens at the same price. Again, if the market opens at $100, then it's going to show it open at $100 on a 30-minute, 1 minute, 5 minute, every single time frame. Doesn't matter. It's open, close. The open and close price don't change based off candle. Ooh, NVIDIA is kind of picking up there a little bit, so that's cool. Side note too, a lot of the stuff that we're talking about and showing on the stream does not have to do with scalping and little intermediate moves, right? If you want to do that, then there's plenty of trades to be had outside of the stuff that I'm referring to. Again, my objective here is not to necessarily capture every single move and be like, hey guys, you could have shorted this top. Why? Again, it's not really about that. For me, it's more about a flow of where markets can move to and from, kind of looking at bigger picture ideas. That's what I want. I want to put myself in the direction of bigger moves, or in the direction or waiting for other key levels that could then start a bigger move. So like for example, if the bigger move here to 508 doesn't come just from now because of whatever, then that's okay because I still have other valuable levels that I know of that could very well get triggered later on and then just reset up another trade, okay? So it's okay for me to be wrong now. That's, not that I think I am or think it, again, it's the market will do what it wants. I'm just here to have my targets, have my rules, follow them, not be too over leveraged. All right. I've had days of making $50,000 and days of losing $40,000. I've done the big stuff. I would love to get back to hitting big trades like that. But over the past couple years, after getting, hit pretty hard during the AMC GameStop shit, then I kind of had to take a step back on the big size stuff. And then from there, kind of just found myself working on SPY a lot. And then getting more comfortable just kind of at the slower, relaxed pace to things. And now, I don't know if I'll ever go back to railing pennies. Railing's a bad word to use. Penny stocks the way I used to. So we'll see. But nonetheless, that's pretty much it. So, yeah. I swear my TV's always doing some crazy stuff. It's like, never wants to work. Like every other piece of technology in my house. As you sow, as you cook, you shall eat. As you cook, you shall eat. Also, number two, I was going to say, I mean, that's not entirely true. I was going to say, when you have such big gaps and then huge gap targets like this, it could very well take a long time for things to progress, right? You can't just hope and expect that it just blasts off in a second, Though we can hope, a lot of times this is not how the market works. Right now we are not holding below any anchor VWAP. So right now arguably we're holding below high a day anchor VWAP, right? Oh yeah, I mean yeah, if you throw on like a 1 minute anchor VWAP, yeah, you can see why like yeah, like ready, like watch, like yeah. So there's the 1 minute, right? So there's the 1 minute top. That would be the back test where a lot of people try to create a lower high, roll the market into a short, and obviously if they fail and whoever went for the lower high rolling short gets taken out, then that's where your next kind of push to the upside occurs, right? So like that people shorted this top, right? It's a fact. Because why? Because we just know, right? So it's like top, drop, push back up to volume weighted average price, double top, lower high, resistance, try to roll. If unsuccessful, market comes up, starts to breach those areas, then that's where the shorts that are kind of participating in this top get nervous and then usually take themselves out. right? But again, until that happens, it doesn't happen. All right, and like you can even look at something like this, right? So let's go to, what is this, a 1 minute? So like, right, like if you look at the 1 minute, right? Look at the 1 minute. The 1 minute momentum is all downsided, right? So basically from this point in the chart, it's all been downsided activity on the 1 minute. Go to the 5 minute. The 5 minute's still positive, sure, right? But still, until doesn't matter, right? 5 minutes positive, sure, that could change. What you're seeing right now in the immediate is that the market's not taking out its previous high, and the 1 minute momentum is pretty much down. Does that mean that you should short? I mean, maybe, sure, if you want to. I mean, again, right? Those are all decisions for you to make. But yeah, as I'm seeing right now in real time, is we have gap and go targets to 508. Right now, 1 minute momentum's a little downsided, so possibly need the 1 minute momentum to stop being downsided for the market to pick back up upsided. Or does the 1 minute momentum drop the market here, which then is going to transition the 5 minute momentum to downside? Sure, maybe. Again, okay. And so if you're going to, and those are all things you would do for more like scalping purposes, 100%. Not saying you shouldn't scalp. Again, it's just, yeah, so that's that. Yep. Actually, speaking of, I got to go take a look at my charts again. Still not even a 1 minute 50 SMA uptrend test. I mean, obviously, if the 1 minute hasn't done it, the 5 minute hasn't done it. 5 minute, no. Nope. Yeah. Too funny. Look at the hold right at the high. But again, like I said, it's all good. Let me look over here. Look at this. Okay, and then 30 minute. Okay, yep. Yeah, I watched the Live Tour. I enjoy it. I mean, it's just golf at the end of the day. But yeah, for sure, I like the Live Tour, like the PGA Tour. Watch them both for the most part. Yeah. I mean, yeah, there's obviously a lot of controversy there about this, that, or the other, but you know, it'll all iron itself out over time. Man, it would be really nice if things could speed up. It's pretty boring. I mean, it just is what it is. Usually the market's always got to do some sort of boring phase, take out some paper hand, shift a market, make things boring, you know, get people to leave the computer, then run the market. Kind of common. Yeah, I mean, I heard stuff about them combining the tours. Not sure what that would actually look like, but I mean, I remember hearing some stuff about that. Such a. I mean, it's just as it is. Same old, same stories always. Move the market up, consolidate it sideways, trap a bunch of people. You know, that's actually kind of interesting. Yes, I was at the gym the other day. I was on the phone with my dad, and we were discussing this. Always run stuff by him, but yeah, we discussed Japan and their markets hitting new all time highs. It's kind of ironic, a country that went through this hyperinflation and huge, massive market crash, and then their market is now just after whatever it was, 20 years, just hitting new all time highs. It's definitely interesting. But I also did learn that now my brain always goes in a million directions when I ask a question. But yeah, so I have learned that, a lot of people think that investing in foreign countries or emerging markets is going to add diversification to their portfolio or just their investment process in general. And many times don't actually know that a lot of the emerging markets or foreign markets they're investing in have a very, very high correlation to the S&P 500. So it's simply just thinking that because they're foreign markets that they're going to diverge from a global correlation somehow, but don't actually do that. So basically, if you're going to do that, you have to make sure that what you're investing in has a negative correlation to the S&P 500 because actually that's me assuming that you live in the United States, so I can't really assume that, but let's just say you do live in the United States, right? The only reason for saying investing in something like Japan's market and not the United States is because you think there's a better return there. Maybe it's going to make you risk averse, diversified, et cetera, et cetera, et cetera. Right? So, and what we've actually come to find over many, 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 many years of investing is that just individual investors think that they're diversified by having asset or money located to emerging market funds and things like that, when in reality they really aren't. And so when our stuff goes down, those go down too. So you would just basically have to do the research of the emerging markets you're looking for, and then run an S&P 500 correlation to make sure there's a divergence between the two. And then, even then, it's possible they could come back into correlation, but at least at that point you've done your due diligence to at least say that in the moment, in real time, this would add diversification to the current market environment. Which I actually haven't done that. I was probably going to be doing that soon. It's in the back of my mind, so I've already kind of planning. That's why I was able to say that probably the way I was, because I've already kind of been planning what it will be doing for that. But because yeah, I've considered, okay, should some of my money be like in some emerging markets? Japan's market just hit an all-time high. Our markets we just keep printing money. Everyone's always looking for safety and return, and it's $1 million question. So the best thing that I guess I could say to you is, if you're considering anything like investing into Japan or emerging markets, is one of a simple and effective way is running a comparison chart, which is just taking one chart with a ticker symbol and then just adding another ticker to it, and then running a comparison chart. And if they're moving in a tight unison, that means they have a high correlation, which means you're not really diversified as far as like owning both. But if there is a big, divergence in the chart movement, then they would be uncorrelated assets at that point, or relatively uncorrelated, where that would provide diversification. I mean, can this thing just sit sideways any longer? I mean, dude, they're just playing games right now. Just straight scam. Just straight sideways scam. Like, come on. Come on, people. Come on. Let's get it moving. Market makers, come on. Stop destroying everyone's premiums right now on options. Okay, there's another day to screw them over. It's not a day with a gigantic gap, all right? You can do that when we're in a sideways, no gap day shit range. Just keep it moving. Just cruising on up there. Preferably before 4 p.m. because I really didn't want to stream that long. My brother, the direction has been chosen, my friend. It's 70% of the time. It works all the time. Live with Connor. What's up, Tom? We send love and kisses. Thanks, my guy. No, I mean, we still got, we still got to see. I mean, we still don't have to see anything. I mean, market does whatever it wants. It can come with speed. It can come with no speed. Shit could take all day long. I mean, that's what I mean is you don't control the flow. You just don't. The theys do. The theys. So let's see, what's our momentum looking like? So you can see here, like, see how the 1 minute max kind of crossing up. Does that lead to something crazy? Maybe. Again, it's not supposed to give you incantation of something crazy, but you can kind of see the 1 minute MAC kind of flipped up. So cool. Like, that's good for bulls. 5 minute MAC is still positive. That was back to zero line read. Yeah, so that's good. Sure. I never really watched like Rick and Morty, so I couldn't like really say so myself, but can you just go already? I mean, who is this market maker that's just pulling the sideways Netflix and chill? So I literally have things to do today. I do. There's a Rocket League tournament today, and I need to play. Selling options for passive income. Great idea if you know the direction of the market. There's no way to make any money in the market if you don't know the direction, pretty much. That's why I spent so much time of my career figuring out where markets will go to and from, when they change. Like, pretty much my whole premise for everything was figure out how, where, and to and from, and how far the market can go, and then you can make money. If you don't know that, you'll never make, like, it's just almost too hard, because if you don't know it's up, then you're betting down and then you lose. And if you don't know it's down and then you're betting up, then you lose. And if it is supposed to go up and you're betting up and you don't know how far it can go, then maybe you buy up into resistance, then you still lose, right? So it really comes down to understanding when, why market can go here, go there, why it would stop here, why there might be a bounce here. Until you know that and you have direction, then it's going to be a very, very challenging game. So I would say yes, you can sell options for passive income, but it will first start with having a deep enough knowledge of the market and knowing which way the markets can effectively move, how far they can move, that would actually start putting the money in your pocket. Because you can sell options, right? Like, oh, they're going to expire worthless and I make money. It's like, okay, so say you sell some puts. Well, you sold some puts in a buy signal, or sorry, let me rephrase that. You sold some puts in a sell signal and the market goes down, you lose. Well, you probably would have had better luck selling puts on a day like today where the market's in a buy signal, right? Not that the market couldn't go down and you lose, but the odds would be more in your favor in that regard, you know? So yeah. So, but yes, there is ways to do that. There is a strategy that my business partner Dave teaches in our elites quite frequently. It's a Texas Bear or a Texas Bull, or is it the Anchor? I might be saying it wrong, but no, I think it is. It's a Texas Bull or Texas Bear. And pretty much that is basically, here's the strategy. So wait, hold on, let me think, because I don't do it as often, but it's been a while. Yeah, so a Texas Bear or Texas Bull would be a situation where you are going to buy either a call or a put that's far out, like months out, right? Maybe a month, maybe 2 months out, so that way it costs a lot, right? Essentially, it's going to cost more, right? And then your objective, so like, let's say you buy a call or a put month, 2 months out, maybe it's $500, maybe it's, $1,000, whatever. Okay. So you've spent at this point $1,000. Now your objective is to pay that off by the time of the expiration. So by buying one call, it gives you the right to then sell a call. Okay. So let's say I buy a call that's $1,000, X amount of dollars away strike, and it's high up there. So let's say, like, right now the market's trading 505. I'm going to buy a call for 500 and whatever. I'm going to go out a couple months and I'm going to buy a call that's at 520. So it might cost a little bit. It's a little far out of the money. And I'm thinking that, maybe it doesn't get there. The objective is that it doesn't get there. It actually expires worthless. So I'm going to call the market up to 520. We're not going to go to 520. And in the meantime, I'm going to then write some weekly calls that are juiced up in premiums that are a little closer. So basically your idea is that you pay for this call really far out that's going to expire worthless. You plan on losing all that money, but by buying it, it then gives you the right to sell a call. And your objective is to burn all the calls that you sell in the timeline of the call that you bought that's going to expire worthless, and it covers the cost. So say it costs $1,000 and it's going to expire worthless in 2 months. So I have 2 months to write as many calls as I can to recoup the $1,000 loss. So basically I buy a call, expect to lose 1,000. And then in the meantime, I have 2 months, and in the 2 months, I'm going to write this call that's going to expire this week, and there's going to be $300 that comes into my pocket. And then next week, I'm going to write this call that's going to expire worthless, and that's worth $300, and I got And then this week I read another one, and this expires, and now I'm at 900. And now there's still a month left on my contract. It's going to expire worthless, so I still got a month of calls that I can write over the next couple weeks that hopefully expire worthless. So your objective is to write closer dated, closer to in the money calls that hopefully expire worthless and cover the cost of what we call the anchor. The anchor being the put or the call that you buy far out that you expect is going to be worthless. It's like throwing, and this is what we came up with, it's like throwing an anchor into the sea, right? You throw it in, you dump it down, and it's just gone. It's just going to go, it's going to go away, right? That's the objective of buying the call really far out or the put really far out, is that it's probably going to expire worthless. Your whole purpose of doing that is to then get the right to then sell other ones to hopefully cover the cost. So anyways, I don't do the strategy as much. I might have explained a little off there, but yeah. I am just holding long the market. So I'm just long market, which would be in the form of S&P 500, ES, or UPRO. So that's what being long the market means. You're the long futures, which would be ES, MES, SPY, UPRO, 3 times leverage ETF of the S&P 500. So it's generally it. That's, yeah, it's pretty much it every time. Yep, so a Texas bull or a Texas bear. Bro, this is just going to take forever at this point. At this rate, they're just going to sit here, grind this slow sideways. I mean, who knows, actually. I really have no idea. Market does whatever they want, but so far it's just... I mean, it's actually really not bad. I mean, we opened up at $503, right? Or, yeah, 503. The market almost hit 506. So, or wait, that's a lot. What am I saying? We went down to as low as 5. I'm sorry. We opened at 504. The market's now up to almost 506, so 504.11. I mean, yeah, we've gone up about $2 or so. We need another $2.40 to complete target to the upside. So we've already done about half of the move, right? A little less than half the move to target already as far as the long goes. So, you know, you got to think, though, like when we got up this morning and we got onto YouTube and we told you guys, hey, the market could be targeting up to 508.25. You got to primarily be long biased because the gap, that's generally how it works. You've already been right and you've already won for the entire morning so far. While someone somewhere elsewhere, maybe in another chat room, maybe on another live stream, have had no idea as far as how far their market could go. They weren't really sure if we were supposed to be bias bullish, bias bearish. They may or may not have been looking at a pre-market high, pre-market low to predict a breakout. Meanwhile, all we've done is just say, hey, it's a gap up. 70% of the time, market's trading the direction of gap. The gap target's going to be this, so we're just going to primarily focus on the upside with the target of being this. And that's it. It's a pretty easy day, right? Sure. Sure. So anyways, you know, would love to just kind of sit here. But, yeah, I mean, not a whole lot to do. And that's the other thing, too, is like once you pretty much give out the levels, could we expect a shorter downswing? Sure, you could totally expect that. Again, yeah. Gaps and gaps. Yeah, so like Jose, to answer your question, I am still looking. Okay, so for me, it's like, for example, right? I know this is gonna be like, oh, that means a lot. Yeah, so the gap, that means by the end of the day, I'm looking for 500. By some point, end of the day, we're looking for that price target to be achieved. Okay? If for whatever reason the market wants to be dumb, drop out, do something scammy, not work in an easy way, then, I'm still okay with, guess what, the market coming all the way down to here. That's still a play I'm looking for. Okay? I'm still looking for a bounce here. Okay? I'm still looking for, that's pretty much the same thing. Yeah, market to here. So like market to here and then fall all the way down and bounce. I want one of those. I want the market to go to 508.25. I don't care / I want market to drop all the way to here. We can do a bounce trade. If the market starts to fall apart and we think it's going to go there, nibble on a short down there. Totally cool with that. So there's still a lot that we're looking for, a lot that can happen. Bottom line is we haven't hit our long target and we haven't even hit our directional support level, so that I follow at least. Now other people might look at candles and this and that, and just saying the things that I follow, we haven't hit a support. We haven't really hit our long target. The market's just chilling in no man's land. It's free grabs right now. It's up for grabs. Market could go higher, market could go lower. Bottom line, we still haven't hit long target, still haven't hit the supports that I would follow. All right, so what's that mean? That means market still up in the air what it really is going to do, because until we hit long targets, gap targets not achieved. Until the market pulls back and actually hits our trending support, then guess you could still do that. All right. There's nothing that tells you in real time that one thing is going to happen over well, not necessarily. There's sometimes that does happen, but there's generally never anything in real time that's going to tell you, hey, the market is going to move right now all the way to this specific price point. It just doesn't work that way. Like right now, right? Like the market's going down, right? So guess what? I could already assume that if I go look at 1 minute, the momentum, look at momentum's down. Like, duh, the market's going down. What do you expect, right? Or I could go to a 5 minutes, like, the 5 minutes about to cross negative, right? So what's that mean? If the 5 minute crosses negative, there's probably going to be a little bit of a sell move down here, right? Does that mean that the market's going to drop all the way down to 503 right now? No. Could it? Yeah. All right. So, anyways, that maybe that answers your question. Like, yeah, there could be a down move right now. The only thing you can do is look at the price, look at the chart, have expected targets, and then what's momentum telling you in real time. That's really about as best you can do. Yeah, what time is jobless claims? That could be, or wait, that would have been happening. No, what? No. Trading, hold on. What's today? Wait, is that tomorrow? February 22nd. U.S. 9:30. Yeah, jobless claims at 8:30. 4-week average 9:45. Well past. We're at 10:46.11. So this is gasoline production. Some bill auction stuff. So like, yeah, I mean, maybe, who knows exactly, but Oh, my knee. Been sitting like that for too long. I mean, so far the market's just done a pretty lame day. I mean, and this is also another thing that happens a lot of times with gap ups too, or gap downs. It's like, it's either market plays nice or market becomes sometimes boring. Actually, I'm just speaking a bunch of nonsense right now, but this is just one of those days where it's like you had a pop up and then the market's pretty much has gone sideways. And it's like it hasn't really reset to like anything that I would see as reputable. It hasn't gone up to anything that's reputable. So it's kind of like one of those days for me as far as things that I'd look at. You're just kind of in like no man's land currently. So it's like, okay. But anyways, yeah, I think I'm gonna call it there. But I will just kind of leave you with this. So pretty much expecting that at any point today we're gonna down swoop, hit some supports around 503. So here's the other thing: is I'm always looking for the market to either sell down to support or support catch up. So I'm cool too with the market kind of rolling over and falling all the way back to like 502.80 as well. Like that's totally normal for me. I don't mind if we go all the way back up to 508.25. Back up, still just up too. So again, like I said, when it comes to gaps, you're going to gap target, or we're looking for continuation off of / pullback / catch up of the overnight 30-minute, 15-minute volume weighted average price, which right now is 502. All right, so this is all still a part of same strategy. But yeah, so that's it. So either pullbacks down 502. By the end of the day, you see market 508. And that's just pretty much it. Yeah, we're still in a buy signal. Haven't tested the current buy signal, trend, anything like that. Those are still things we look for. So anyways, I will let you guys go. Again, like I said, if market ends up sliding out to like 502 or whatever, totally normal. But anyways, you guys have a good one. Catch you around on another stream. And that's pretty much it. Yeah, cheers. Love you guys.